I don't invest in PSUs despite they being a unique business. Do you want to know why? Let's begin. PSUs are definitely unique businesses, and many PSUs are monopoly in the sector and even sector leaders. Despite that, I still don't prefer investing in them, and there are many reasons for it. So let me share them one by one with you. The first one is they don't operate very efficiently. Efficiency is the most important factor for any businesses. So if you want to compete in this landscape in the 21st century, you have to be very competitive. And PSUs don't work very competitive. So I will give you one example or one or two examples. Let's say in a banking sector, PSU banks has been losing market share to private banks. The main reason is they don't operate efficiently. I mean, I have read an interview of one of the CEOs of a PSU bank, and he was complaining like he cannot give incentives to better performing employees. So once you can't incentivize the performance, there will be no motivation to perform consistently for an employee. So you may have seen that you get phone calls for opening an account in private banks, but you have never got a call from a PSU bank. Very rarely if you would have got. The reason being there is no incentive for a PSU employee or PSU bank employee to perform. And once you don't have that, there is no efficiency that goes into the working of an employee. Similar is the case we know with Jio and BSNL or in a telecom sector. Like today also you can get a SIM of BSNL, but to get a SIM of Jio, all you have to do is download the app, request an eSIM, and the configuration will be delivered in your SIM. I mean, I'm not sure if BSNL operates this efficiently, but it wasn't the case few years back, and so BSNL has gone out of business. We have seen similar case in Air India as well. I mean, it couldn't compete with the players who were performing well. And there are numerous cases where we can see that PSUs don't operate very efficiently, and it is one of the major reason why I don't invest in any PSU. The second reason why I don't prefer investing in PSU is they don't have a very high return on capital employed or ROCE. It's one of the critical factor for me to consider investing, and I have created a detailed video about it. But when it comes to PSU, I don't see PSUs having very good ROCE for a very elongated period of time. And that's one of the second key reason why I don't invest in PSUs. The third reason why I don't invest in PSU is I am a growth investor. So I like to see compounded profit growth, and I'm yet to see any good PSU that has a good 26 or 20% CAGR profit growth for the past 3, 5, 10 years. I can see one exception over here, IRCTC, but then once you look at IRCTC and its valuation, you would see that it is valued at par with at 50, 40 or 50 PE multiple. So that's pretty much in line with an FMCG business. But apart from IRCTC, I don't see any company having a 20% or around even 20% CAGR growth for the 3, 5, 10-year period. Reason number 4 is they pay high dividend. Yes, you have heard it right. Because PSUs pay high dividend, I generally don't prefer to invest in them. The reason is when the company is paying out very high dividend, or if they are not retaining its earning with the company, there is a very less chance of growth, or they are not looking for growth as such. I mean, they are just going with the flow, and as the GDP and India grows, the PSUs grows. So they are not looking to say increase the market share or go faster than the GDP or faster than the market. That's not in the DNA of the PSUs. Moreover, Government of India is one of the major shareholders of a PSU company. So what happens is Government of India is interested in withdrawing as much dividend as possible. So once the promoter or the main promoter is interested in taking out as much money as possible from a PSU, that becomes a negative factor for me to consider investing. Further, I have even seen instances when PSU has taken a loan to give out a dividend. And so it clearly suggests that the aim of a PSU is not to generate profit growth. The aim of the PSU is to generate cash and pay that cash out. So if I'm not considering a dividend yield as one of the factor to invest, so PSU doesn't come into my radar for investing. The next reason why I don't invest in a PSU is the stock price CAGR is not there. So the companies have not performed in the past 3, 5 or 10 years time frame to give a say 25% price CAGR. Not the business, but even price. So once they have not performed in the past, I'm not sure why they will start performing once I invest in them. So I don't prefer investing in them. Point number 6, Not available at a fair price to my returns expectation calculator. You have heard it right. So even a 4-5 PE stock may not be at a fair price once you expect a high CAGR return from your investments. So let's look into this. I will use the video that I've shared of how to calculate the fair price of a stock. Is the same Excel sheet, and we will use the example of ONGC as a PSU to see what is the fair price of it and how I see that it is still trading at much above price, though the stock is still trading at 5p or under 5p. So this is our fair price Excel sheet we have. So now let's look at ONGC. It's one of the PSUs and it has an EPS of around 33.5 rupees. So let me just put this over here, 33.5 rupees. And the growth expected for the company, profit growth has been 6%, 15%, 13%, 5%, but 5% is a good estimate because this 14% in the past 3 years and 5 years is mainly because of higher crude prices. And roughly the company has been doing around 5% to 7% as the CAGR profit growth. So let's put 7% over here. And if I expect a return of 25% and with a margin of safety of only 10%, and if I expect to sell the stock after 10 years at say 12p, the fair value with the margin of safety comes out to be around 75 rupees. So stock is currently trading at around 150 rupees. So still it's not available at a fair price for me. Now, even if I expect the to be able to sell the company at 20p after 10 years, so if the PE expansion happens from 5p to 20p, and if the company is expected to grow only at 7%, still the price of the stock should, the price at which one should be buying is around 140 rupees, and with 10% margin of safety, the price should be around 127 rupees. This has a very high risk because you are expecting a company to be trading at a 20p, so you have to increase your margin of safety a little bit, and so ideally you should be buying at around 110, 115 rupees. So still you can see that the fair price of the stock is much lower than the currently traded price. Reason number 7 why I don't invest in PSUs is volatility and price changes. So government is trying to make most of the companies private by selling them off or coming up with an IPO and things like those. So once there is a news that one of the company will become a private, or is a government is looking to sell it or exit from it, then the price rises very sharply, and when the news subsides, the price falls back very sharply. So you can be caught on the wrong side of the news. Similarly, there can be too many news flows related to railways or oil in the world, and the price volatility is too high. And so policy and price volatility makes me nervous when I'm invested in a company, and that moves too much in either direction. In one direction is fine, but once the company is moving in either direction, I generally tend to avoid them. Finally, I prefer investing in compounding growth stories. So that way, even if I have purchased it at a very high price, or if my entry was not perfect in a stock, it's a matter of time where I have to wait and the earnings will catch up to the valuation. That once the quarter on quarter earnings keeps on rising, it helps me calm down my nerves and I am not very impatient. But if the earnings don't compound or earnings don't increase as we move forward every quarter, then I become too impatient. So generally I tend to avoid companies where I don't see earnings and profit keeps on growing. Hope it helps.